computer. Perfect. Hi, Igor. I'm so excited to ask you a few questions about the tax season and business since it's coming up very soon.
Hello, Sandra. Good to see you again. Yeah,
Always good to see you.
tax se- you as well. You as well. Yeah, tax season is coming up. It's actually starting this Monday. So it'll be an interesting time. But that's just the personal taxes, and the corporate one never ends. So
I kind of feel that, but I do have you to and your team to help us with that. So I only feel it a little bit, but I do have some questions for you. So why don't we get started? Um, what are some changes in the Canadian tax laws this year, and how will they impact businesses?
so there's been a couple of changes this year. And a few that I thought might be good to let people know about is Um, well, I have them noted down. So one of them, the first one is the principal residence rules for homes sold within a year. So starting January 1st, 2023, homes that were sold within 1 year since acquisition will have to pay tax and will not be able to claim the principal residence exemption. So the sale will be deemed to be on account of income, not capital gains. So this means it will be treated as if it's business income. So this is really looking to target a lot of people who are, they buy a home, they call it their principal residence. Was it really their principal residence? And then they sell it within a year, buy another home, and they kind of keep doing this. So now, if you sell the home within a year, it will not be treated as a principal residence, and boom, you have to pay tax on it. And it's business income, it's not considered capital gains. So it's taxed at the full 100% kind of thing, not just 50% of the gains. Um, there are a few exceptions, and some of those exceptions are death of a taxpayer. So if a taxpayer passes away, that is, they can sell the home then and stuff like that, right? Like, I mean, not him, but his executors. Um, a sale taking place because of a new addition to the household. So a new addition would be a related person joining the taxpayer's household or the taxpayer joining a related person's household. A sale resulting from a breakdown of a marriage or a common law relationship. However, the taxpayer has to have lived separate and apart from their spouse or common law partner for at least 90 days prior to disposition. And a sale because of a threat to the personal safety of a taxpayer or related person. Examples could include threat of domestic violence, unexpected dangerous neighborhood or neighbors. There are a few other exceptions, but those were a few that were of importance. Um, another change that's coming in is, and I think a lot of people like this one, is the first time home savings account. So I think a lot of people are going to like this one. It still hasn't passed though, and it looks like it should be passing legislation in April of 2023. So the entire plan here, the entire idea here is that this is a registered plan to help Canadians save towards their first home by allowing account holders to contribute up to 40,000 over the lifetime of the plan. So you can contribute up to $8,000 per year. It works similar to like an RSP, where the contributions would be tax deductible, and the qualifying withdrawals to purchase a first-time home would not be taxable like a TFSA. Unlike the home buyer's plan, the funds do not need to be paid back. So the good thing here is, or what's happening like now, if you think about it with an RSP, let's say you put in like $8,000 into an RSP, you get a tax deduction.
Mhm.
But then let's say you buy a home over the next 15 years, the money that you've taken out from the RSP to buy the home, you got to put back, you got to pay tax on over a period of 15 years. Whereas with this, you don't. So it becomes like a really good plan. And I think a lot of people will like it. So they can contribute again, it's 8,000 per year. And it looks like it will be starting in 2023 in April, roughly. But again, that's if it passes legislation, which I'm pretty sure it will. Um, So it's a good way for people to save for buying a home, and it only really applies to people who first-time home buyers. So
Okay.
not really anybody else. So that's the kind of the people what they should know about it. Um, but for people that haven't bought a home, I think that would be I think it will help a bit. And the other one that I think is good for people to know about is the underused housing tax.
Mm-hmm.
So it's a federal tax applied to vacant or underused housing in Canada. It came into effect on December 31, 2022. So generally speaking, it targets foreign property owners, but there are many Canadian residents who will be required to file the form, even to only claim an exemption from the tax. So excluded owners include an individual Canadian citizen or permanent resident of Canada, a publicly traded Canadian corporation, a person with title to the property in their capacity as trustee of various widely held trusts, a registered charity, a cooperative housing corporation, a municipal organization, or other public institution and government bodies. So all other owners, referred to as affected owners, are required to file an annual return and pay the UHT unless they meet an available exemption. Specifically, all private corporations, partnerships, and trusts which own residential property in Canada, as well as individuals who are neither a Canadian citizen nor a permanent resident, are required to file an annual return to either claim an exemption from the tax or to determine the tax payable. Okay, so a couple of things for people to know about. I think those were three important things
Mm-hmm.
that will be affecting businesses and individuals this year. So I thought it would be good for people to know.
Yeah, thank you. That was really comprehensive and a really good source of news and updates on the tax
Yeah, thank you.
life in Canada. So moving on to businesses, how can businesses ensure that their financial records are in order before the tax season starts, which is very soon?
Uh, well, I have a couple of ideas for this one, so I'll uh, I'll share those. Hopefully, it will help out.
Please.
Um, so one of the things is people should look that the first aspect is about the bookkeeping.
Mhm.
So if bookkeeping isn't done, isn't completed, they should look to find a bookkeeper or an accountant who can do this for them. So that's one thing. They will need to provide them with their receipts, bank statements, credit card statements. Um, you can't really do a tax return until this is completed. So this is really that first step that needs to be done. Um, you can't really proceed anywhere without this. Sometimes people will say, "Oh, you can do my bookkeeping with a tax return," but then it really depends how much activity there is.
Mhm.
Um, we've been struggling, for example, when clients provide their bookkeeping for an entire year, and we don't even take clients on like that anymore because it's just we don't have the capacity to be able to catch up a file for a whole year, for example.
Mhm.
So we look for clients that want to be caught up on a monthly basis. We get their books caught up on a monthly basis and kind of go from there. So if somebody's kind of coming and saying, okay, I want to do my tax return, but their bookkeeping isn't done, we would look whether or not that's a good fit for us to kind of to work with such a client, just because when February, March, April comes around, we don't really have capacity to be working on bookkeeping and then
Mhm.
doing their tax returns right after. So it's very likely that if we do take it on, it will be delayed. And in most cases, we wouldn't even want to take it on. So obviously, you just want to make sure, like I said, that the bookkeeping is completed. Um, that's very important for like businesses.
Mhm.
The other thing that I should mention is the funds available maybe that people should have. So they should ensure that throughout the day, as they earn income, that they put a portion of their earnings into like a savings account to help cover taxes, HST. And when I say taxes, I mean both corporate taxes for a corporation or if personal taxes for both. If it's a sole proprietorship, for example, or so HST and taxes in general, what they should be looking to cover. A lot of clients don't even realize how much tax they could be liable for. So
Mhm.
planning accordingly is very important, right? A lot of clients do not have the available funds to pay for taxes, and so and they end up paying a lot of interest and
Mhm.
penalties over time. And on top of that, it's quite hard for them to actually catch up on these payments. It seems like then they end up being stuck always at least like a year behind.
Mhm. Mhm.
Um, so I say, like, if you can put a portion of the funds into a savings account, I think that's a good idea. Or somewhere that you will know about it. This is for tax, and you know uh, that's if you ask me how much to put in, HST itself is 13%. So I would say put the entire gross amount of HST 13%. The input tax credits, whatever you get back, that's a nice break.
Mhm.
And then you got to consider then what your personal tax income is, and the corporate tax rate is 12.2% in most cases. So that's kind of usually the percentage you want to keep on those. And then also depends on your personal marginal tax rate, because that could be another 20, 30% you want to be saving. So in the end, it can be quite a lot that you want to be saving.
Yeah.
Um, so just to make sure that you cover taxes. So yeah.
Perfect. Thank you. A lot of proactive work is what I'm hearing.
Yes.
Perfect. And can you share some tips for businesses to maximize their tax deductions during the tax season?
Yeah, so there's a couple of tips or a couple of expenses that might be worth mentioning. Just for people, even though maybe they know about them, in some cases it tends to be forgotten about. So one of them is the car they drive or the mileage. So for example, if they have a corporation, they can claim mileage on actual they can claim actual so they have two options. They can claim mileage or actual receipts of like gas receipts and repairs, etc. Mileage ends up being a lot better in general for this. If they have a sole proprietorship, for example, they can only claim based on actual receipts. They can't claim mileage.
Mhm.
So that's one thing to keep in mind. And a lot of people do drive in general for the business. So keeping a car log of some sort is very helpful, because when CRA asks for proof, a car log is what they want to see, that where you drove from, where you drove to,
Mhm.
what was the reason of the trip, how many kilometers was the trip, right? If you don't have this, it's really hard to provide, like to be able to provide some documentation to CRA.
Mhm.
Home office expenses, another common expense. If you use a portion of your home for a business, you can claim home office, such as utilities, mortgage interest, property taxes, home insurance, and so forth. So
Mhm.
those are it's a good expense. A lot of people have a home office, so it's a good one. It's another thing they should consider about claiming. Meals and entertainment. If you take out clients out for lunch, you can expense those costs. However, the expense that you can claim is only 50% of the
Mhm.
total. But if you take out all your employees, for example, you can claim 6 events in a year where you claim 100% of the meals and entertainment expenses. So it's not limited to the 50% deduction. So it's 100%. So it's a good thing for people to know about. Like, for example, if they have a Christmas party or if they have some
Mhm.
special events throughout the year, they can actually claim a full percent. They just have to know that all the employees need to be invited to the event.
Okay.
Um, and then I wrote one about income splitting a little bit. If you have a family member that works for you, splitting income with them could help lower the tax burden. Of course, it should be looked into how to do this properly. There are many rules with income splitting. If the family member is not really involved in the business, you really got to be careful about splitting that income.
Mhm.
Rules have come into place a few years back with CRA targeting this, so you got to be careful. Otherwise, the income could be attributed back to yourself. So those are a couple of things. It could work, but you got to just be careful how you do it. So
Perfect. Thank you. That's really useful information. I think a lot of business owners sometimes forget what they can expense and also how to do it properly.
yeah, of course.
Perfect. And what should businesses keep in mind when choosing a tax preparation method, like hiring a professional or using a tax software?
Yeah, this question kind of comes up often in general. Um, and over the last few years, or last 10 years at least, with a lot of the like with the software kind of coming out for taxes,
Mhm.
there's been a lot of people trying to do it on their own.
Mhm.
And so for some people, it makes sense. If they don't really have much, they can try doing it on their own with a tax software such as TurboTax, for example. It really isn't that complicated, and the software tends to guide you well through the common deductions and the credits that you might have. it asks you specific questions and things like that. And if you're like, oh, do you have this? And if you select yes, then it will take you, through another whole set of questions as it pertains to you. If you select no, then obviously it will not even bring that up. There is the possibility of missing things like that if you aren't if you aren't sure how to answer something or another section in a section properly. I can see that, but in general, I feel like it's not bad.
Mm-hmm.
However, if you have like more complex tax matters, like you have a business, rental properties, investments, um, like even a lot of people have like various disability claims,
Mm-hmm.
or like children or maybe spouses that get separated, so one can claim an eligible dependent. um, those tend to be a little more complex, so then how you like go about it on your own, you can probably do it, but it might be easier to think about whether or not you want to hire somebody to do it like a professional. um, so yeah, there are just other credits and deductions maybe that could get missed if you don't answer certain proper questions properly in the tax software. Um, but I would still say like if it's a simple personal tax return that you have, a T4, and a lot of people just have a basic personal tax return,
Mm-hmm.
T4, maybe they pay like rent they pay and stuff like that. Yeah, go ahead, do it on your own, TurboTax. It shouldn't really be a problem.
Mm-hmm. Mm-hmm. Yeah, but for businesses especially, at least the businesses I come across, it's always best to use a professional. I know from
Yeah,
our own experience as well.
of course. I understand.
And along those lines, then, what are some of the common mistakes that businesses make during the tax season, and how can it be avoided?
So, a couple of things is like one of them is waiting until the last minute. So waiting until last minute to provide your tax documents to the account, for example, that's usually problematic. The account is busy as it is, so they likely won't be able to have a chance to get it done for you in time.
Mm-hmm.
And in general, the clients get confused. They just assume this is something that can get done in like a matter of minutes,
Mm-hmm.
right? So they're like, oh, why can't it be done? And it's so usually after like mid-April, you start to see a lot of accountants saying, if you send us your tax documents now, it will not be done in time.
Mm-hmm.
Usually happens around between April 10th to April 15th. Some people do it, some people take on clients April 25th and they get them done, but it also depends on how many tax returns they have and all of the work and so forth, right? So if you can be proactive, send out, like I said, tax season is starting next week. So start sending your documents as early as possible. And then you get it done in March, or even if it's done in April, that's fine. It's not going to be an issue, right?
Mm-hmm.
Um, and the other comment is not responding to accountants' questions promptly. It's similar to what I just mentioned. It's going to mean that your tax return could get delayed or not filed on time, right?
Mm-hmm.
And when it's not filed on time, that means you're going to have some interest and penalty charges. If you have a business, or even if it's just general receipts, for example, medical donations. If clients do not have proper receipts, they get audited. They run the risk of having the claim denied, right? So you want to make sure you have proper receipts.
Mm-hmm.
And for example, when it comes to like medical expenses, if you've been going to like the same pharmacy throughout the whole year, you can go over there and get a whole printout of all the medical receipts that you would have had there, that you would have everything, all the prescriptions, everything you would have bought for the whole year. So you have everything's, in their file.
Yeah.
It's just one thing like to think about, right? The other important note is not informing accountants on major changes in the year for like in the prior year. So if they don't inform the accountant of major changes, stuff could also get missed, right? The tax returns could be filed incorrectly. So it's very important to communicate with the client and disclose any changes that occurred that could have an effect on the tax return. So those are just a couple of things that I would say are important for our clients to be made aware of. With the biggest one, probably just sending your information and your documents on time, and not waiting until the last minute.
Makes sense. They gotta help you help them type of
That's right.
situation. Perfect. Thank you. One question that comes up a lot is small businesses and incorporating. Are there any benefits? And if there are, what are the benefits of small businesses incorporating?
Yeah, so this is always a big question. People always ask about this. Maybe they started as a small business, like a sole proprietorship, and they wonder if they should incorporate as
Mm-hmm.
their business hits off, or maybe they wonder if they should incorporate from the beginning. So it really, there are benefits, um, and so we can look at a few of those. One that most people always refer to is the lower tax rates.
Mm-hmm.
So corporations are taxed at lower tax rates as opposed to individuals. The reasoning is that you would take the funds and reinvest, pardon me, that you would take the funds and reinvest it into your business.
Mm-hmm.
Um, so the key part here is that you would take the funds and reinvest it into your business. A lot of people don't seem to understand that concept. So what they do is they open up a corporation. All they hear is about lower tax rates. If they made $100,000 on as a self-employed individual, they incorporate, and their whole goal is to also make $100,000 with the corporation, but then they pull out the entire $100,000
Mm-hmm.
and then hope that they will pay tax like money at a lower rate. When you do this, that doesn't actually really help you, um, because as soon as you pull the money out of the corporation, you are no longer reinvesting that money into the business, and now you're paying tax on your personal hands based on whatever you took out from the corp.
Mm-hmm.
So that's one thing to keep in mind. If the corporation, let's say, has net income of $100,000, it's going to pay tax. If it's active income, it's going to pay tax at 12.2% currently,
Mm-hmm.
and that's federal and provincial Ontario rates, right? So it's going to pay 12.2% tax. So that's $12,000, 12,200. Whereas an individual who makes $100,000, they'll be paying a lot more than 12,200, right?
Mm-hmm.
But of course, this is saying that the money is going to be reinvested. A person is going to have to take out some money for their personal living, personal expenses, right? So
Yeah.
whatever they take out into their personal hands, they will pay tax on that. So whatever the marginal tax rate is on the income that they take out, that's how much they'll pay.
Perfect.
Um, on top of that, there is also the benefit of limited liability.
Mm-hmm.
So the shareholders are not responsible for the debts of the corporation unless you were negligent. So if the corporation goes bankrupt, nobody should be able to go against the individual personally. There are
Mm-hmm.
many exceptions. Like if you're guaranteed a loan personally, for example, then of course the lenders can go after your personal assets as well.
Gotcha.
Um, Directors, however, are liable for amounts that were owed by the corporation, which were not deducted, withheld, remitted, or paid as per the Income Tax Act, as per the Employment Insurance Act, the Canada Pension Plan, and the Excise Tax Act. So
Mm-hmm.
what that means, the directors could be liable for non-payment of corporate taxes, HST, payroll remittances, right? So
Mm-hmm.
that's it's a very important thing to know, because I hear sometimes cases are like, oh, I'm just not gonna pay any of these and I'm gonna declare bankruptcy.
Mm-hmm.
You could be personally liable for all of those debts. Um, another benefit is life of the corporation can extend beyond that of the founders. So that's very important. The corporation does not cease to exist when the founders die. The corporation is a separate legal entity and can keep going. When a founder dies, their shares are passed on to their heirs or transferred via a sale, right?
Mm-hmm.
So conversely, so proprietorships automatically dissolve when the owner passes away, right?
Yeah.
Um, and another benefit is easier ownership transfers. So a corporation is a separate legal entity again, and owners do not own assets directly. Instead, they own shares in the corporation, which in turn owns the assets. So this makes transferring ownership interests much easier. It makes it easier to attract investments. Venture capital firms and angel investors like to know they can get in and out of investments on like pre-agreed terms, right? So those are a few benefits of incorporating. It doesn't make sense for everyone.
Mm-hmm.
It makes sense for a lot of people, but it doesn't make sense for everyone. So that's one thing to keep in mind.
Perfect. Thank you for clarifying.
Yeah, of course.
Mm, tax season and individuals. I know you obviously more work mostly with businesses, but I'd love if you can answer a couple of questions on the individual side of things. The first one being, what is the tax filing deadline in Canada this year, 2023?
So the deadline for 2023 is May 1, 2023, because April 30th falls on a Sunday, and the self-employed, the sole proprietorship deadline is June 15th, 2023.
Perfect. Thank you. And what is the difference between a T1 and a T2 tax return?
So this one comes up often. Um, so a T1, that's a personal tax return. So all individuals, residents of Canada should be filing a personal tax return, which is called a T1 general. And a T2, that's a corporate tax return. So it's anyone that has a corporation will be filing a corporate tax return.
Per-
So if you have a corporation, you will be filing a corporate tax return, but you also obviously still have to file a personal tax return for yourself.
Perfect. Thank you. As an individual, not a business, can I claim a home office expense on my tax return?
Yes, you can. You can claim home office expenses. For individuals who are employed and receive T4 income, there are different requirements that they need to meet in order to claim home office expenses, as opposed to individuals who have a small business, such as a sole proprietorship. Nevertheless, though, if the requirements are fulfilled, both individuals could be eligible to claim home office expenses. So there are stipulations on when a small business owner can claim home office expenses and when an employee can claim them.
Mhm.
So that's, yeah, it's available for both.
Perfect. Thank you. One more tax question. What advice would you give to both individuals or businesses who are struggling to prepare for the tax season?
Ah, find a good accountant who can guide you through for the first year. I think that's a good start. Although it might be hard trying to find someone, you can you should still, if you maybe start a bit earlier, instead of like February or March, because then if you talk to somebody like, let's say, in the summer times, it's usually a better time. After, like, when you find somebody, you know, remember what they told you, be proactive going forward. A lot of individuals and businesses get anxious about taxes, so being proactive about it and not pushing it until the last minute will ensure that everything is filed on time and that you don't owe any interest and penalties, right? So it's usually when people are struggling to prepare for tax season, there's like usually a couple of reasons. One is they haven't filed their taxes for a few years,
Mhm.
so they don't even want to do it anymore. Or like, they have a business probably of some sort and they just have all these receipts and they're busy. So when they come home at night, like at 8 p.m. or 9 p.m., the last thing they want to do is be looking through these receipts and trying to
Mhm.
sort them out. And right. So that's why I say it's good to kind of update this or have a bookkeeper and get this updated on a monthly basis and keep on top of it. Maybe at beginning, businesses like they try to save some money, so they'll try to do it on their own. Yeah, it works for a bit, but as soon as you start growing, like you just don't have the time for that. So
Makes sense. Thank you. Thanks for answering all of these tax questions. Super helpful information for businesses and individuals. I do have two more questions for you on a more personal side of things because I know the audience always wants to hear from Igor. So the first one, the first one being, Igor, what do you like to do in your free time? How do you relax and recharge after work?
oh, that's an interesting one. A little personal about Igor. Okay, so there's a couple of things I enjoy. I'm the type of person who enjoys meditating. So I will do a lot of meditating probably in the mornings. That's one way that I recharge, that I not recharged at the end of the day, but it's how
Mhm.
I get ready for the day.
Perfect.
And I like doing that. I like in the summer times I like biking. So that's one thing. And now since I have a small daughter, the rest of the time I spend with her, and that's I really enjoy that and kind of gets me to forget about the day. So it gets me going. That's what I enjoy.
The smile just got bigger when you were talking about your daughter. The biking and meditation got a smile, but your daughter just got the biggest smile. I
Yes, of
noticed it right away. I
thank you,
love it.
thank
I love it.
you.
And what advice would you give to someone who is looking to start out in the accounting field or who's looking to make a career change and transition to the accounting world?
That's a good question. It's accounting is a good field for a lot of individuals. Um, the thing now, there's quite a big shortage of accountants out there. So it shouldn't really be that hard to find a job in the accounting field. Um, and accounting is such a broad industry. So there's so many things you could be doing from tax work, and that could be personal to corporate tax work. And there's a ton of stuff in there. It could be working on financial statements in one capacity or another. It could be working on a lot of bookkeeping clients, like for example, like our firm does.
Mhm.
So there's quite a big variety. So then the first thing would be like, where do you kind of want to start? Which way do you want to go? Are you trying to pursue your CPA? Is that one thing that you want to go for? Or are you okay with kind of just, you know, not pursuing your CPA and just kind of want to be working like maybe in the bookkeeping field or a manager role, but not going any higher. So there
Mhm.
are many things like that to consider. There's also, for example, like the entire field of payroll.
Mhm.
There's also the entire field of like HST and sales tax. So all of those things are very less special. For example, we have individuals at our firm, for example, that do a lot of payroll work. So any payroll queries, they get passed on to them quite often. And there's a ton of stuff like in those fields. So for somebody who's just starting out, it's good for them to, maybe get a general feel. So they start out maybe doing something, they can see how that goes, and then they test out a few other areas. So it's like, okay, for example, like in our firm, we have, somebody who be new that'll be starting out, they can try out like, personal taxes, they can start out, they can work on corporate taxes, they can work on year ends, they can work on financial statement reporting, they can work on bookkeeping, various types of bookkeeping, various industries. They can work on payroll queries. They can work on various sales tax issues. So
Mhm.
they can kind of see, okay, they like this, they like that. And then depending on that, they can kind of figure out their career and which way they want to proceed. So I hope that kind of answered it a little bit. So
Ah, that was a great answer, a lot of great information. Well,
yeah, of
that was it. Thank you so much again for coming on camera. We always love
course.
hearing from you, and we love the education you're giving us and all the information.
Of course. Thank you, Sandra. I
Thank
appreciate that.
you. Thank you.